Hey, hi everyone. Welcome to another video in our hedge fund series. So today we are going to discuss about Kenneth Griffin of Citadel and his life and how he formed the hedge fund and what are the strategies that the company deploys and how the company was formed and what major challenges that the company had and major milestones in the company. So Kenneth Griffin is the CEO and Chief Investment Officer of Citadel LLC. It's a leading hedge fund and financial services firm. Kenneth Griffin was born in Daytona Beach, Florida, and he was born to a General Electric project manager. And from his childhood, he was a good student, and he started learning about coding and computer science, and he even developed his own educational softwares, and he sold it and made good money. And yeah, he did apply to a lot of colleges, and he got admitted into Harvard Business School. And during his Harvard business school education, he was trading from his dorm room. He read the book called Beat the Market by Ed Thorpe, and based on that book, he deployed this strategy called convertible bond arbitrage strategy, and made good money. He also took a PE options. It was PE options. Put option in one of the companies based on a news, and luckily during that time the Black Wednesday happened, and he made a huge amount of money with that put option. Yeah, and he read this book called Beat the Market by Ed Thorpe, and he deployed his convertible bond arbitrage strategy, and he gathered some fund from his family, and he was a well connected. He was born to a well connected family, and had it comes from a good financial background. And yeah, while he was explaining his strategy to one of his Harvard classmate, then a wealthy investor who as a retiree has overheard him, and he has given one $250,000 for him to manage. Okay, so he was given that amount of money to manage, and he did produce good returns from that particular money. And after that, what happened is he was even after graduating from a degree in economics from he founded Citadel with 4.6 billion in capital. Okay, and yeah, this was 1 million investment came from Frank Mayer of Glenwood Capital Investments. So Frank Mayer is also associated with our Edward Thorpe. So Edward Thorpe's quantitative strategies, and he was an inspiration to Kenneth Griffin, and Frank Mayer was contributing to money to the hedge fund. Okay, so that's how Citadel formed, and basically Frank Mayer told, you manage this $1 million, and if you make good amount of money, you can start your own fund. And Kenneth Griffin was able to produce 70% returns in the first year, and then the fund grew in size. Basically, Frank Mayer's connections and his clout had brought in more funds to the capital, and Ed Thorpe's quantitative strategies have given them the edge that they need. So yeah, Citadel was formed in 1990 in Chicago. Basically, Frank Mayer asked Kenneth to move to Chicago, and initially named Wellington Financial Group. In 1994, it was renamed to Citadel, and in 2000, it expanded its operations in the creation of Citadel Securities, a market-making firm. So market making a firm. So market making is basically you make money from the bid ask spread. Okay, so that's what a market making firm is. And yeah, you make money through that particular bid ask spread. Citadel achieved a record breaking profit of 16 billion, making it the most successful hedge fund in industry in 2022. So it employs a multi-strategy approach. As I told you, initially it took the strategies from the Beat the Market book by Ed Thorpe, and it used to do this convertible bond arbitrage strategies. But now it does a variety of hedge fund strategies, like long short strategies across global markets. And yeah, we will cover one separate video on long short strategies, which is a hedge fund strategy. Basically, you go long on a particular strategy where you feel that it's bullish, and then short on certain equities which you feel like they're not going to perform well. Okay, I think I discussed it as a part of one of the main strategies, but we'll go deeper into that. Fixed income and macro, so corporate bonds and interest rates and currencies. So they make money through trading in government and corporate bonds and currencies and interest rates and commodities. So yeah, they have a trading desk for commodity trading, also energy, metals, and agricultural products. So they also have a trading desk full of portfolio managers for stock picking. Okay, so this is the commodities trading. They also do quantitative strategies. Also, they trade all these models, the algorithmic and statistical models developed by Ed Thorpe. They use, and whatever new strategies they have formed, also they use to trade. Event-driven strategies also they use, like mergers and acquisitions. When our, we will have a separate video on event-driven hedge fund strategy. But when events happen like mergers or acquisitions, or bankruptcy, or yes, and then these companies use those events, hedge funds use those events to do their investments, thus generating profits. So its risk management focuses on capital allocation, stress testing, and liquidity management, with specialized teams overseeing these aspects. So that's what its investment strategy is. Okay, yeah. The challenges that the company faced are in 2008 financial crisis, when the subprime mortgage crisis happened. They were not able to foresee that financial crisis is going to happen. So they lost 55% of their value. The situation was like, if uh, they had only few days left, so that if JP Morgan Chase won't get bailed out by Japanese investors, they would not survive. And if the government didn't do the bailout, they would not survive. And the bailout did happen, and they survived that crisis. And during that time, they lost 55% of their value of the fund. Investor redemptions were suspended. They suspended the redemptions of the investors for 10 months. Okay, and the found after this crisis, they again bought a lot of distressed assets. I talked about that during the contra trade that is done by Citadel, where they bought all the distressed assets at a very low price, and the market rebounded, and they made 62% returns in 2009. Okay, regulatory scrutiny is one challenge faced. They faced a 7 million fine for violations related to short selling regulations. So as a hedge fund, you can do short selling also, and yeah, and if any violation happen on short selling is also a strategy that is deployed by hedge funds, and a lot of people have made a lot of money by short selling. Dan Loeb is one of the guy who made a lot of money through short selling during the subprime mortgage crisis. We will have a separate video on that also. So major milestones are Citadel's flagship funds have surpassed their previous high water marks, allowing the firm to resume charging performance fees. They charge more. Their performance fee is 25%, which is a little bit industry standard only. But they have been consistently surpassing their high water marks, and they generated 28 billion in revenue, returning 16 billion to clients, a record annual return for the firm and the hedge fund industry. Uh, Griffin expressed openness to selling his stake in Citadel, following a similar move with the Citadel Securities in 2022. Yeah. So it has a presence of 2,900 employees and operates in North America, Europe, and Asia. And its firm is headquartered in Chicago. It relocated its headquarters from Chicago to Miami, citing a more favorable business climate. Okay, and Griffin is recognized for revolutionizing the hedge fund industry with a focus on technology. So he was a techie guy, and he used to get the stock quotes through a antenna in his Harvard dorm room also, and he was trading options when it was in infancy, and he was trading strategies like convertible bond arbitrage based on beat the market book by Edward Thorpe. So he was much ahead of his age. So he has completely revolutionized that particular industry. He was lucky also to a certain extent, because when he took the put option, Black Wednesday came, and he survived the 2009 crisis, and Edward Thorpe's co-founders have given him money to manage the fund, and because of their cloud, they were able to make this fund very big. Okay, so Kenneth Griffin is recognized for revolutionizing this hedge fund industry with focuses on technology, risk management, and diversified investment strategies. And today, his leadership has positioned the Citadel as a dominant force in global finance. Okay, so that's the background of Kenneth Griffin and the company that he formed, Citadel, and the challenges that the company faced, how it came into being, what strategies it deploys, and where it stands in terms of revenue growth and milestones. So that's it for today, guys. Thanks everyone for joining the call. Have a nice day. Bye.